Good morning. I'm Pat McClatchy. Welcome to our Thursday live E3 market report. This morning we're broadcasting from Memphis, Tennessee, where overnight we had about an inch of sleet and about 4 inches of snow. Memphis, Tennessee is not known for its skilled drivers in bad conditions. So if you're out there and you have this kind of weather, I'd encourage you, if you don't have to get out, don't get out. We're getting ready to get started here in a couple of minutes with our export numbers as they come out. We'll let you know overnight. We had the cotton market down 17, wheat down 3.5, corn down 0.5, soybeans were up 2.5. As we look at some of the outside markets, the dollar was up about 17 points. Not a big move, really not having much of an effect on the market. The crude oil is up about 15 cents a barrel. Gold and silver are both up a small amount. And we have the stock market looks like it's going to be up a little bit overnight also. These numbers that are about to come out probably are going to see some light numbers again as we did last week. And then we'll just see if the market has anticipated that and what the reaction will be. Looking last week, cotton had 71,400 for last week's number. We'll compare that and see if we can hold into that same level. The corn and the wheat and the bean numbers were a little bit light also. But we're about to get the numbers. They're coming out now. We're actually looking at a negative number in cotton, a negative 62,500. So we had cancellations. The immediate reaction of the market is down. We right now have the cotton market down 30. Looking at wheat, 469,000 is the number there, and the wheat market at the moment is firming up a little bit. We've got the corn market, 828,100. That compares to the last week's number of 715,000, and the corn market is about the same, maybe just a little bit stronger. Now also looking at the soybean number, 499,500. Last week's number was 459,000, so close to the same. Before the number came out, we were up about 2.5. Now we're up about 2, so no real change there. Let's look at the breakdowns now. We'll start off with cotton. The cotton number, the cancellations are the negative number of 62,500. We showed Thailand taking 13,000 bales, Egypt 8,900 bales, Taiwan 7,600 bales. Then the cancellations, China had cancellations of 114,000 bales. Indonesia had 3,900 bales canceled. Pakistan 2,300. That's a little bit of a surprise for the market. The market has backed down some, but it's down about 33 to 34 right now. July cotton down 32, December cotton down 34. So all the months are down. Let's go to wheat. The number 469,600 metric tons. That's up 43% from the previous week and up 34% from the 4-week average. Egypt took 175,000. Mexico took 55,700. The Philippines took 50,900. We did have small cancellations for China. China canceled 10,000 metric tons. And the wheat market right now is a little bit stronger. It's rallied about a penny from where the market was before the report came out. Going to the corn market, corn number of 828,100. That is up 16% from the previous week, but down 5% from the 4-week average. Saudi Arabia took 285,300. Japan took 262,000. And we've got Mexico taking 218,000. The bean market, 499,500. Up 9% from the previous week, down 8% from the 4-week average. China took 121,300. Mexico 88,700, and Japan 49,200. That's that is less for China and soybeans than we've seen. Let's see if we've got any cancellations in soybeans. You know, I don't see any cancellations, so that's actually a positive thing for the bean market. So that's really what we've got. Markets are not doing a lot. Let's go ahead and make some comments about the market here over the last week. The wheat market has sold off over the last week. Since we met last week, from the high we saw to the low we've seen, we've sold off about 27 cents. Some of the news, and quite frankly, as I look at wheat, most of it seems to be negative. Technical selling in the market, strong dollar actually reaching the highest level we've seen in a very long time. Weather's not really been a problem for wheat. That at one time was considered a positive for prices. And then negative action in soybeans and corn. That's influenced the wheat also. The seasonals actually still point up into the spring. The targets for May wheat's at 4.94 right now. The target there is, for some technicians, is 5.40. For new crop for July wheat right now is at 5.01 3/4, and the target for the July wheat for some analysts is 5.30 to 5.40. So that's what we're looking at in the wheat market. Looking at corn, the news, some of the negative news has been also the technical selling and the strong dollar. We could add to that the fact that the bean market seems to have been the most dominant market this week, and it's been down, and it's been influencing the corn. We've actually seen about a 10-cent drop over the last week in corn, so not a lot of movement. The seasonals still point up for the corn market into the spring. The targets, old crop May corn is at 3.89 1/4. That's down 1/4 cent. It's been firming up since a report came out. Old crop target of 4.10 to 4.20. December corn is right now at 4.13, down 3/4. 4.40 seems to be an area that some analysts are still talking about for the target there. Soybeans, a lot of news really affecting the bean market this last week. Over the last week, we've seen a 44-cent sell-off in soybeans. Some of the talk has been, first, that China could be backing out of our market, focusing more on Brazil. That does seem to be the case with the light number from China of 121,300. The technical selling in the market has been prevalent in this market. The soybean meal has been negative this week. That's also been an influence. Market could not follow through when it had gotten above some really positive technical levels, and we started to see some selling come into the market as people began to liquidate positions in disappointment over the market. Also add to it what we've mentioned in the other markets, the dollar has been at high levels. Looking at the positive side, demand is still good for the market, and funds we think will be returning as buyers at some point as this market finds some stability. And the bean market right now is up 3.5 in the May. Looking at seasonals, they point up in the market typically until April and early May. Looking at targets, old crop, the May beans are right now at 4 at 9.98. The target there is 10.50 to 10.70 to the upside. Actually, we want to discuss the downside targets. You're actually into a level right now, or a little lower, where we had some downside targets that could find support, could lead to this market starting to push back to the upside. New crop beans, right now, the November soybeans are trading up about 4 at 9.77 or so. The upside target there would be $10 to 10.20. And the downside target could have been down into the 9.60 and our 9.70 level, and could still be that. Summary, let's look at old crop first. Once we get past the South American harvest pressure, we should start to trend higher into the April-May period. New crop, we will move with the old crop. We've seen that in recent weeks. When the old crops had good rallies, new crop also moves along with it, but runs into the trouble into the $10 to 10.10 level in that area, and we expect that to continue. Now let's go to cotton. Cotton market this last week has been down 320 points. As I look at the screen, it looks like cotton is firm back up to where it was. Actually, before the number came out this morning, cotton was down 17. Now we're down 14. So the market did take a blow and drop with this report, but now it's starting to firm back up again. We've got the May cotton up down 13 at the moment at 63.47. Looking at the news, commodity funds got too long in cotton. They built a long position over about a 3-week period, and as it got up to that high level and to a heavy long position, the funds felt the need to start liquidating and lightening up. So I think that was part of it. I think also there was talk that we could see a squeeze in March cotton. That squeeze did not materialize, and some disappointment there as people started coming out of some of their long positions. The dollar, as we mentioned in other markets, is at very high levels. That's a negative. Looking on at the positive side, cash market is still very tight. The demand for high quality machine pick cotton, the kind of cotton you have in the U.S., Australia, Brazil, is very strong, and the supplies are very tight. That's we looking also at the mills. Will be interested in buying this market, even though there's a cancellation here on dips that we've seen. There's a really good chance the mills will continue to buy the market. So this time next week, as we look at this export figure, I think we'll see a good number because we've seen this good 320-point sell-off. This number we're looking at now today reflects last week's numbers, and they reflect those very high prices. I also think the funds will come back into the market after they liquidate enough and are not holding as heavy a position, and we start seeing the market start to firm up again. I think you'll start seeing them come back in again. Seasonals point up until mid-April, and the targets are the same targets we've seen. Old crop cotton right now is only, let's see, down 9 to 10, 63.48 area. Looking for the old crop to possibly still get up into the upper 60s off the tightness that we're seeing. New crop that's right now trading down 21 at 64.82 has got a target still into the 70 and 74 level. Let's just kind of summarize here and tell you this, that in the U.S. in a very short period of time, a great deal of this cotton, 80% of the cotton in the U.S. went from farmer hands to merchant hands in a very short period of time. The overbought market has been correcting, and also the selling that we're seeing from funds. We'll see good mill buying on dips, and we should continue to see the cash market get tighter for this high quality cotton. Looking at new crop, higher prices are necessary to attract enough acres in cotton in the U.S. People still talk about the large amount of cotton in stocks around the world, but there's not a large amount of the kind of cotton that the mills really want today, the modern mills. And so we're expecting this market in new crop that's trading at 64.88 to be moving up. We think we can see this market, according to analysts, over the next 2 months move into the area of 70. That still continues to be the target we're looking for. 70 to even as high as 72 or 74 is possible. If not, you're going to see substantial cutbacks, not just in the U.S., but also in other parts of the world where they grow cotton. And this market, as tight as it is, really can't afford to have really low acres. It's in the interest of the mills to be able to assure themselves that they will have adequate supplies at harvest time. So that's really it. That's it from Snowy Memphis. We appreciate you joining us on the E3 Live report today, and hope you'll join us again next week. Thank you.